Tax-free savings. A 100% offset account is a tax-free savings account. Whilst 100% offset accounts and mortgages with a redraw are common, what is not fully understood is how to use these facilities to maximize the financial benefits they provide. Watch the video to see the possibilities. Welcome to our introduction to using your mortgage to gain a tax-free savings account and minimizing the interest you pay to the bank. Firstly, let me say that each person or couple will obtain a slightly different result, as we all have different loan balances and no doubt earn different levels of income and have different spending and savings habits. This is a business plan for your mortgage, not a get-rich-quick scheme. Most of us learn about finances from our parents or family members and only ever get a very basic level of understanding, on top of which we get all of their prejudices and fears. The origin of the word mortgage comes from Old French and Latin before that, and literally means death pledge. There are 4 types of debt. Good debt is money invested in income-producing assets that make a profit and provide an income. Bad debt is money for personal loans, credit cards, items that provide no long-term financial benefit, do not grow in value, and do not provide an ongoing income. Necessary debt. This is your typical mortgage, which provides you with housing, security, a tax-free savings account, and tax-free profit when you sell. Rent debt. This is your ongoing rent over your lifetime, where you pay twice as much as a mortgage over 30 years, and another 20 or 30 years after that, and have no asset or financial security. It is a debt that never ends. Rent is literally the real death pledge. Let's look at the 2 most common options home buyers face, and I will keep it simple. KISS. Paul and Mary Smith earn $75,000 and $60,000 gross income per annum. They have purchased a home worth $500,000 and have a mortgage of $450,000. If we calculate an average interest rate of 6% per annum over 30 years, the interest will be $521,272 plus the $450,000 for a total of $971,272. What if Paul and Mary maximize their 100% offset account or redraw facility and run their mortgage as a business? The result could be significantly improved. Zero balance on their mortgage in 11.8 years or 18.4 years ahead of schedule. Interest reduced to $178,396, which is a tax-free savings of $342,876. You cannot be taxed on money you have not paid to the bank. Factors that may impact the result are pay increases, inflation, interest rates rising or falling, children and life in general. But at least Paul and Mary have a plan to minimize the interests of the bank and save money along the way. Let's face it, the rest is going to happen anyway, but now they can afford that beer or wine or a holiday. To request an initial review of your own mortgage business plan, click on the link and our business advisor will be in contact between the hours of 9 a.m. to 7 p.m. Please allow 10 to 15 minutes for the initial review. There is no cost or obligation for this review.